From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Just gone 4 p.m. here in Sydney as the market closes out this session of the day. It's been a good one. We've kind of resisted that downward trend, extending a rally. A lot of confidence, of course, over China's aggressive stimulus package, and we're up by around 1% heading into the close. Just bringing it out to the broader theme though, and the RBA warning was quite interesting. They had their financial stability review out today, just 2 days after, of course, leaving rates on hold and warning households against over borrowing once rates do eventually fall. Now, the RBA did say that the financial system in Australia is fairly resilient, but that a small but growing share of mortgage holders are falling behind on payments. Now, the share of borrowers experiencing severe financial stress remains small at less than 2%, but 0.5 of 1% of loans in arrears are in negative equity, and they are warning that that could rise if we do see borrowers stretch beyond their means once rates start to fall. So the RBA, though, hoping that household budget pressures will ease once rates start to fall, but they did warn that if people then borrow beyond their means, that could cause a bit of a boom-bust cycle. A Star is torn. We finally heard from Star Entertainment Group today. Now, remember, it failed to release its earnings to the market by the end of reporting season, so it was placed in that trading halt. It's also, of course, under review with regards to its Sydney casino operating licence. But today, Star came through, finally releasing its full year results to the market. It has narrowed its stat loss to $1.7 billion. But of course, still quite a big loss. And Miner's moment, just really about that overall rotation we're continuing to see on the hopes of potential more stimulus from China as well. Martin Lakos from Macquarie telling me he's expecting more. The big miners, Fortescue, Rio, BHP, all looking good. Fortescue closing higher by another 3%, $19.45. Rio is up by 2.3%, $123.40. Today there was a bit of a switch out of those energy players though, as we did see global oil prices slump over 2% on Wednesday. Of course, these worries over supply disruptions in Libya and the ongoing unrest that we are seeing in the Middle East. Let's have a look at some of the sectors, retail in particular, on the back of course, looking at the RBA's warning. We had Premier Investments, of course, releasing its results yesterday as well. The miners, we just touched on that. BHP, Fortescue there, I mentioned. Having a quick look at tech as well. WiseTech. We spoke to the CEO today, Richard White. You should catch that interview online. Great interview by our friend Andrew Gagan. WiseTech at $133.82. Looking at some of the other company news. Soul Pat, we also spoke to the CEO there, Todd Barlow. Up by 2.3%. It did report a 28% drop in full year profit, but of course that was a lot to do with Brickworks and New Hope. Platinum Asset Management rejecting rival Regal Funds Management's bid to take over the money manager. Stockland also in focus. The ACCC saying it won't oppose Stockland and Superlife's proposed acquisition there. Let's get into the overall themes of the day, and welcome to the COB, Jimmy Jang from Macro Capital. Jimmy, your take on the day's action? I mean, it was a pretty good one today.
Morning. Yeah, of course. Yeah, it was a pretty good day for the market. And obviously, we got the Fed meeting coming up very soon as well, around November. The one of the key data or the forecast that we're really kind of looking closely with is the CME Fed Watch Tool. And we're obviously seeing a series of rate cuts coming up, which is a significant shift in that Fed policy after we've seen that the Fed has made weeks ago. And the market is expecting about 2 cuts by November, about 50 basis points, and 3 by December. So up to about 8 cuts by September 25. So that's largely still in line with the expectation before the 50 basis point of a rate cut. And also, this all kind of have to be in mindful that they're all reflecting the Fed's concerns about the slowing economy in the US. And they're likely to stabilize that growth while keeping inflation in check. It'll be crucial for us to make sure that we're in line with what the Fed is forecasting with the economy in the US, but still don't want to sit on the pure sideline to make sure that they're all in line. But some of the things other like real estate and equities and alternative assets is something that we're looking very closely with right now. And obviously, speaking of alternative asset, we saw the Bitcoin dropping about 4%. And, the price movements of Bitcoins often mirror the broader market sentiment. And, we're seeing some softness, definitely, so perhaps as a response to the global economic uncertainty that we're experiencing. But if the Fed continues cutting rates, we might see that renewed interest in the Bitcoin and the other cryptocurrencies, but especially with traditional assets underperforming, that would be a really good issue. So domestically, we obviously have the RBA scheduled for November as well, and we've seen some shift in rate cut expectations. That's something that we want to focus on today. So as of today, we saw the probability of rate cut in November has actually increased slightly from 22% to about 24%. While it's still unlikely, the markets are expecting the first rate cut to come in about February 2025, which was initially forecasted for March. So additionally, we're looking at about 25 basis point cuts by December 2025. So one thing that we want to really focus on today is the market has kind of stopped pricing in of the RBA potentially hiking the rate by end of this year. That's a key focus. So that gives us a little bit more certainties with the Australian share market now. So we want to kind of slowly, aggressively, allocate to the market. Well, when I was on ausbiz for the last few weeks, I was always kind of being quite defensive, but we're kind of slowly, aggressively allocating back to the market.
All right, Jimmy, let's get into what you are investing in then. BKI Investment Company. What do you like about that?
Yeah, I mean, BKI Investment Group, along with, probably Australian United Investment Company as well. So we got ticket code for them is BKI and AUI. They're very well established, what we call LIC, so listed investment companies. And both of them are very highly regarded LICs in Australia. So there are long histories of delivering consistent returns. So to give you an example, BKI with its 5-year total shareholder returns, a TSR, of around 7.1% and 3-year TSR of 7.6%. And both have a very strong exposure to banks, consumer discretionary, mining, energy, and communications. And a key highlight is that it's 6.5% gross yield, making it really attractive for those income-seeking investors. And AUI, on the other hand, offers a slightly higher 5-year TSR of roughly 7.3%. Although its 3-year TSR is lower at around 5.7%. But what we do like about LIC right now is that diverse sector exposure, including health, which could probably provide defensive qualities as the market reacts to those Fed's move. So what we like is a bit of a more diversified portfolio. And on top of that, with these kind of companies, get a little bit more diversification with exposures as well.
Jimmy, I know that you're looking at some of these investment companies and people say that Soul Patts, for example, is probably the closest we've got to anything like a Berkshire Hathaway. Did you have a look at its results? Because it was out today.
Yeah, absolutely. Soul Pattinson, for example, was in our portfolio for a long time, and we are pretty sticky investors with them for the, let's say, last 6 to 8 months before they release their results. One of the things that we probably liked a little bit better with, let's say, BKI and AUI is probably the diversification that they have across the whole sector. And on top of that, Soul Pattinson was definitely on our watch list as well when we were considering these LICs. But at the same time, we probably like these names a lot more comfortable with. After speaking to the management, for example, we spoke to the management of PM Capital weeks ago before we made this aggressive allocation. And some of the standout performer that PM Capital, for example, proposed was that it was definitely in line with our investment mandate with our investors, which were basically achieving the absolute return, finding those niche areas that these funds are allocating. So these are the 3 names we'll probably a lot more prefer in this current market than Soul Pattinson, but definitely not ruling out Soul Pattinson to come through to our portfolio because we just kind of initially started allocating back to the market. Definitely could be something we'll be considering in the next 3 to 6 months.
And speaking of that allocation in the market, I mean, I'm just curious as to your thoughts on the so-called great rotation back into the miners.
Absolutely. So I think one of the key focus, especially with the, let's say, the allocation side on some of these names, we're allocating close to about 30 to 40% in total to these 3 names. And that's a big importance, especially what we're trying to achieve is, especially with the uncertainties that the US market could be offering close to November with the election coming up. Now, when the Wall Street has been pricing in, more favor towards Republican before Biden dropped out of the race. Now, because Harris joined the race a few months ago, now it's looking really 50-50 kind of points where who's going to win the election. So there's a lot of uncertainties that the market is presenting, especially with miners, for example, with some of the commodity prices really recovering. We don't want to jump at the race too early, but definitely don't want to join the race too late. So we are definitely considering it, but at the moment, because we've been in a sideline, now we're allocating to the market, we like our certainty a little bit more better through diversification like these LSE.
All right, Jimmy, always a pleasure. Have a great rest of your Thursday, even though it's a terrible day here in Sydney. That is Jimmy Jang from Macro. Now, we touched on Soul Pats there with Jimmy. It was the stock of the day, the double stock of the day, because of course Soul Pats has a large stake in Brickworks. So our panel looked at Soul Pats and Brickworks. Daniel Ortiz from Stock Doctor and Mark Gardner from MPC Markets joined Nadine.
Both are probably closest to a hold for me, but if I was interested in buying one at the moment, it would be Brickworks, and on that rate cut thematic, it probably has a better flow-on effect to their property book as well.
Industrial property is a good place to be. There is high demand, and I think I wouldn't be buying these today. There'd be a hold. I think if you've got these in your portfolio generally, they're good ones to buy on market panic because they've got such stable returns and such long track records. And they do hold really high quality companies, within the portfolios. So look, it'd be one that I'd be looking to, if there was any broader market panic, they're always really reliable ones to buy, to buy for the long term. But it's bordering on an ETF.
Bordering on an ETF. All right, let's have a look at the market leaders on what was a very good day. A lot of momentum coming through in some of these, uranium and energy players. Strike, Paladin looking good. Brickworks we've touched on ad nauseum. Coronado, Global Resources and Light and Wonder also looking good. To the downside today, interesting Fletcher Building when you're looking at the likes of Brickworks and Soul Pats today, but it was down 3.3%. Woodside and Santos really dragged lower by the slump in global oil prices, as was Karoon Energy, and Dexus finishing the session down 1.6%. Having a look at the small end of town, some of those smaller energy players looked good. To the downside today, Step 1, Bamboo Undies, down 9%. All right, let's have a look at what we're expecting tonight. A big one, Jay Powell speaking in the US. GDP, the June quarter figure revised coming through. Durable goods orders for August, pending home sales for August, and Kansas City Fed Manufacturing Index for September. Kicking it off to tomorrow, of course, it is a Friday and not much tends to happen in Australia on Fridays, I've noted, but Tokyo is still working hard. They're going to have core CPI data released tomorrow. Just checking where the local market has finished, 1% gain there on the CBO 200, and I'll tell you where the ASX 200 has finished. 77 points or 1% higher, 8,203. So that's a really interesting pivotal moment that we've got back above that 8,200 point level. A lot of momentum coming through back into those miners, and every sector except, energy finishing higher today. So that drop in crude weighing on the overall energy space. That does it for today for the COB. We'll be back from 9:45 a.m. Eastern. I believe someone just reminded me I'm on the early shift tomorrow, so I will see you bright and early then. See you then.